Namaskar, I am Anindya Banerjee, and today I'll take you on a journey about how the future trading works. See, let's take an example of gold mini, right? So if I buy a gold mini futures contract at 1 lakh rupees, that is per 10 grams. So, and the price moves from 1 lakh to 1 lakh 500. Basically, I made a profit of 500 rupees. So the overall profit is around 5,000 rupees. Now, instead of that, if I would have bought the futures at 1 lakh rupees and the prices would have fallen by 500 rupees, so at 99,500, and I had to exit it at a loss, then the loss would have been similarly at 5,000 rupees. So this will of course change with the commodity, in this case if it's silver, and also the type of the contract, whether it's mini, it's a micra, it's a petal, but this is for a mini contract. So you are trading the price movement, and that's why it is very important to keep an understanding of what is the impact, the P&L impact on your position from the price fluctuations. Now, one can always make this point that the gold and silver commodities, they have delivery on the exchanges. So does it make sense for a speculator to take delivery? Not at all, because here generally what the speculators do, they generally roll over their position before the delivery period starts, or they exit. So these are the typical things, and you can use futures for two things. One is speculation, of course, and the other one is for hedging. Let's take the example of a jeweler. So who has exposure to the gold and silver in the physical market, they have to hedge themselves. But one thing you have to always keep in mind when you are trading futures or options, that it is important to manage your risk, because you are taking leverage. If you don't manage your risk, your gains and your losses can both get amplified. Now from futures, let's move to options. Options, we have options on futures, which means if you allow the options contract to expire, which is in the money, they devolve into futures contract, right? But they trade like any typical options contract. These are European options. In this case, is what happens. So what is the option? Option is basically like an insurance contract. If you buy an option, you are paying a premium. Like you buy any insurance contract, you pay a premium. If you are selling an option, you are like the insurance company. You receive the premium. So when you are buying an option, your risk is limited. When you are selling an option, your risks are unlimited. So one has to understand this. Gold 1,30,000 call option gives you the right, but not the obligation to buy the gold futures at 1,30,000 rupees. Now, if the gold prices rise above strike plus premium, you profit. If not, your loss is limited to the premium, which I just explained at the start, because when you are buying an option, your risk is limited. Let's take the example of a silver put option. So if you bought a silver put option, a strike 1 lakh, that gives you the right to sell the silver at 1 lakh rupees. Again, your loss is equal to the premium paid. Here the key difference: in futures, you bet purely on the direction. In options, you bet on direction plus speed. This is very important, because a lot of people make this typical mistake. They start using options as a proxy for futures. No, when you are taking a bet on futures, you are basically betting on which way it will go. If you are right on the direction, you make money or you lose money. But in options, you have to take a bet on the speed of the move. Whether you take a bet on the direction or not, that depends on the strategy, but you have to take a bet on the speed of how fast it will happen. So that is very important, because this premium decays and it becomes zero at the time of expiry. Basic comparison between futures and options: futures have a higher risk and a high reward, and options have a limited risk. That depends totally on the options strategy which you are following. If this helps you understand the markets better, give it a like, share it with your trading circle, and subscribe to Stockshaala for more actionable insights on commodities, currencies, and derivatives.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.